Hey, have you ever wondered, like, what's it really like to have whole life insurance? Like, is it really that good? Is it really the best thing ever? Is it really better than even having money in the bank? That's what we're going to talk about today with MC. So be sure to hang in there. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you that works so hard for your money, and you're now ready for your money to start working harder for you today. You want that freedom and cash flow now, not 30 or 40 years from today, but you want it right now so you can live that life that you love, doing what you love, being work optional. And guys, we know it's not just about getting rich, it's about living a rich life because as you are blessed financially and you have more resources, you now have a greater ability to bless the lives of those around you. Thank you for allowing me to really create that ripple effect through you guys as well. Tuning in, you've been sharing these podcasts, and again, you guys have been absolutely wonderful. So thank you so much for being a part of this. As a reminder, if you haven't done so already, guys, go and give us a shout out, give us a rating out on Apple Podcasts. We'd love to be able to hear from you. If you think the show sucks, then don't waste the effort. We're fine. But if you love this show, please give us a great positive review. We'd love to be able to hear from you. All right, I'm bringing on a special guest today, guys, MC Laubscher. Now, some of you guys, if you follow Cashflow Ninja, his podcast, you got to if you haven't. But if you haven't don't know MC, you gotta check out his stuff. MC is awesome. I would almost say like this is like my brother from another mother, right? And from a whole nother country too. His background is incredible. His story is great, but also like this guy understands not just talking about like whole life insurance and infinite banking, but even more so about how does that work with alternative investments and what really works, what doesn't, what's going on in the world right now, what's his perspective of the U.S., all that kind of stuff. That's why I brought MC on for today, and so glad to have you on, MC. I know we've been trying to make this work for a long time, but it's good to have you back.
Awesome to be here. I've been looking forward to our conversation.
I know you guys don't even know this. Even before we went on the air, we already had like a half-hour conversation chatting about stuff. So we're already kind of warmed up a little bit. So MC, I mean, give them a little bit of your background and where you come from.
Yeah, so originally from South Africa, and I grew up during a very interesting part in the country's history. So when I was a young man, I remember, I mean, we went through the whole transition from the apartheid regime government over to Nelson Mandela being released from prison to holding elections at that stage and having him become the president. So it was wild during that time. As a young man, I saw just how a massive crowd reacts, right? A country collectively, and the psychology of massive crowds, and
Mm.
the panic, the fear, the uncertainty, which all really, if I look back now, it was a gift at the time. I didn't realize it, but it really helped me in business and investing. So facing uncertain times and doing things to get some certainty and predictability in your life of your family, your business, and your investments. I played sports in high school and had an athletic scholarship at university. And then when I was done with university, I actually traveled quite a bit and I ended up in the United States playing in a league here up until 2007. So rugby league in the United States. And yeah, it was obviously a great time. And while I was playing in this league, people travel. We were either on a bus or on a plane, so you develop some habits. Some not so good, others better. So when guys were playing cards and getting into video games, I was the guy with books, right? Investing books and economic books and history books and so forth. And that's when I found Rich Dad Poor Dad, Robert Kiyosaki. I read the book and just changed my perspective. I grew up middle class in South Africa. So it changed kind of my perspective of a different world out there and a different operating system. And I started to take the money that I was generating while pursuing a career in athletics, just buying real estate. So I bought real estate right away. This was 2001. Got some tenants in there, collect rent, pay the bills. There's cash flow. You're like, oh, just like in the book, this is awesome. And then you're like, how many times can I do this? Right. But then the school starts, as any investor can tell you.
Mhm.
You funny enough, sometimes people don't pay the rent, and sometimes they damage your property, and all of these, and more fun things that you get to discover
Hmm.
as a real estate investor. So I was doing that, and then just through my network, I was introduced to very interesting people in the rugby world, which influenced me as far as investing in real estate and going from single family to multifamily, which I know we can dive into that a little bit more. Um, but yeah, over the course of, I would say, what is it now, 24 years? It's been interesting. I discovered roundabout I would say 15 years ago, I discovered this infinite banking concept, and we'll talk about how I discovered that. But implemented and executed it in my own life, and then started a firm in 2015, Producers Wealth. Obviously helping business owners and investors implement and execute that strategy. And then also started a podcast in 2016, just talking about alternative wealth strategies and alternative asset investing. And that's been quite a wild ride having that show. And the Cashflow Ninja is turned into a educational company, so financial education company.
That's fantastic. I want to get your perspective. I mean, when you see Americans, especially with the stresses that we deal with and the complaints that we have, is it pretty comparable to what you've seen, or are we kind of a bunch of marshmallows?
Well, I would say that obviously a massive difference in the two worlds, and
Mhm.
we just recently went back to South Africa, myself and my family, and took the kids there and visited family and friends and did all the fun stuff. So, having a fresh perspective, just coming back from there about a month ago,
Mhm.
and looking at the United States, it is a first world country, right? So you're used to
Mhm.
certain things. Obviously, in Africa, and especially where they're at right now, they're very, very, very durable, and yeah, just they can grind things out. Because if people that are listening might not be familiar, but they had like rolling blackouts, power outages,
Oh wow.
probably since 2005 actually. And it's really at some in some areas of the country, they sometimes have them for as long as 8 to 12 hours. So the
Crazy.
the grid goes down, and they're very self-reliant. Like I said, durable. They have generators and their solar panels and so forth. So
Mhm.
life just goes on. There's not a lot of complaining.
Mhm.
life life just goes on. Oh, the grid's down. That's fine with generators, solar power, and so forth.
Mhm.
Water. We have our own wells. We have water filters and so forth. And the things we need to take care of ourselves and our family, and food, and so forth. Where sometimes I think there's a level of comfort, right? People panic
Yeah.
here when Amazon boxes don't show up the next day after they were ordered. so so there's definitely a lot of differences, but I think people, especially in the West, Europe too, they get used to the good, finer things in life, having
Mhm.
the privilege of living in a first world country, right?
Right. Yeah, I've always wondered that because I mean, I've lived outside of the US, before, and it was still a first world country where I'd lived as well. But I've noticed that it seems like we just kind of take a lot for granted, and it sounds like an expectation. Like you say, like in South Africa, it's more of a, well, yeah, we get that because that's just life. That's just what we deal with. That's our normal. Where our normal is like, oh wait, I didn't get my student loans paid off or something like that, right?
Yeah, no, no, absolutely. And I mean, if you think about, the United States, and you said we here take a lot of things for granted. I can tell you, when I came to the US in 2001, my mind was just blown of the
Uh-huh.
opportunity that's here. The upward mobility that's available for anybody in this country still, I still haven't seen anything like that around the world. Where in most countries where your lot in life, where you're born into, it's very
Mhm.
hard to usually get out from there. It takes a little bit of luck, and then also a lot of hard work and skill. But over here, I mean, you just bring your talents and your skill sets, your capabilities, and your mindset, and work your butt off. I mean, the sky's the limit, and there's so many rags to riches stories in this
Yeah.
country that it's no surprise, right? That you have all these stories.
That's for sure. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Now let's kind of switch gears a little bit. So you mentioned like you got into the infinite banking space about 15 years ago, which is roughly a little after the time that I was starting to look at it too. But what was it that turned you on? You said there was a moment or there was a conversation you had that kind of turned you on to this. What was it?
Yeah, it's interesting. So, I was, like I shared, pursuing a career in athletics. So there wasn't really employment opportunities for me. I was
Hmm.
traveling all the time. Nobody was going to hire me at that stage. I'm like, well, I'll be here for 2 to 3 days a week, and then I'm gone most of the time. So, I had a friend at that stage that I met through the rugby network that they owned a lot of multifamily, or they own real estate. And we started talking about real estate. And he said, well, you know what? Just come and jump in there by us when you're in town.
Hmm.
And we'll find you something to do. And I at that stage, I read Rich Dad Poor Dad, and I'm like, well, the rich work to learn. They don't work for money. And I don't care if I do this for free. I'll get to learn the business. So I jumped in there, and I still remember I started right at the bottom with multifamily, like picking up trash. That's where I started. That was my first job. I started picking up trash, eventually painting, doing construction, running construction crews, doing apartment leasing, negotiating with vendors for the buildings. And then eventually, managing over 500 units. And I got my broker's license at the time too. But when I got that opportunity from that friend, I didn't realize that they were one of the largest owners of multifamily on the north side of the city of Chicago. And it was a legacy family where for several generations, there's been legacy wealth built for that family. And I didn't know any of this. So, until I got to know my friend better. And, he was like a third generation in the family of being, one of the stewards of the family's wealth. And we would have great lunches while I was working at his just in real estate for one of his businesses. And one of these lunches that he had all of his advisors with him. And so he would have his asset protection person, he's a lawyer, he's estate planning lawyer,
Hmm.
and of course his tax person, and then life insurance. The life insurance person was there. And I remember at lunch, the life insurance person was kind of the quarterback, having all these discussion with the lawyers, the asset protection people, the estate planning, the tax person, bringing it all kind of together. And I was kind of blown away. I'm like, I don't quite understand what's going on here, because at that stage, I'm very, very, very young, and my idea of life insurance was the idea that a lot of people have, like, hey, somebody's going to die in order for someone else to benefit from this. So I was asking him, I'm like, I don't understand what's happening here. So the life insurance agent or broker was kind of like the quarterback of this discussion that we had at lunch. And he said, yeah, that he's the key player in our a wealth team of one of our advisors. And I said, okay, I understand like the planning and legacy planning and life insurance part of it. And he looked at me and he said, well, that's where we warehouse our money. So we warehouse our money in life insurance contracts. And that we combined with our life insurance contracts, we have a family bank, which then finances everything that the family needs, our operating businesses, our real estate, and so forth. Which was funny because they were also shareholders in a private bank. And
Hmm.
in my head, I'm like, I don't I don't understand. You're also shareholders in a bank, and you're like, yeah, we are, but we don't have our money there. Our money's in life insurance. So it was fascinating. I was just blown away at that stage. And then I started to, of course, just like when I found the Rich Dad Poor Dad book with Robert Kiyosaki and went all in on learning about real estate, and I just took a deep dive into life insurance to try and learn everything that I can, and how this is being used by these ultra affluent and ultra wealthy families. And it's just fascinating that for 170 years in the United States, plus these families that we all know have come to know their names are on buildings, this is a vehicle which they have used to warehouse their capital in because of all the many things that it does for them.
Now, I found it fascinating. I remember we were actually hiking in Hawaii when you were talking about the story, and
Yeah.
especially because of the fact that they have a private bank. But why is it that they don't keep their money in that bank? I mean, obviously, if it's a family bank, you think that's the safest place they can store it. They're not going to let it fail, like some banks might, but they're not going to let it fail. But still, they chose to keep their money held in life insurance. Why?
Yeah, it's fascinating. If you look at the allocations for banks itself,
Hmm.
that life insurance is a place where the major banks warehouse a lot of their tier one capital.
Yeah.
So I find it fascinating that it's been kind of a bedrock of guaranteed capital that's guaranteed to grow tax free, with also then the death benefit. But yeah, at that stage, it was they established their own quote unquote family bank to warehouse, the majority of their capital. So do they have bank accounts? I'm sure they have bank accounts. They still use their own bank for that reason, and they still have money in it, but the large amount of capital, the majority is all warehoused in life insurance contracts.
It's almost like they view their bank as a business and they're like, yeah, I might put a little in here, but really, I want everybody else to put their money in so we can make money off that. But then we're going to store money over here, right?
Yeah, an operating business, which is part of their whole system, right? One of the avenues that they're generating income from.
Yeah, exactly. And so, how did that change your perspective? Because obviously, you decided to get in the industry after this point, correct?
Yeah, so I set up my own policies. Well, actually, I did that through someone else,
Hmm.
but I set up my own policies, just on a smaller scale, and that's kind of where I was looking for people that was doing it because obviously I couldn't use the advisor that my friend was using, but yeah, I was looking for people that could do it just on a smaller scale, and that's kind of been my philosophy. Like, look, you don't have to be the Rockefeller family to do what the Rockefeller family does. And when I
Yeah.
started to implement that just in my own wealth strategy, I just couldn't believe the results. I always had access to capital. To at that stage, still doing single family real estate. And of course, tenants don't pay, things break, they
Hmm.
damage the property. I got to deal with evictions. Instead of having to go to a credit card, which I did before that stage, because
Hmm.
everybody told me cash was trash, right? You read it
Hmm.
everywhere, you see it everywhere. Um, I would have to, before I started doing this personally, like I said, I would have to go into credit cards, but now I don't. Now I just use my own banking system to access cash when I need it, and then repay it. And it was just it made a massive, massive difference. And I was like, the one thing that's making the biggest difference right now is this, because everything else I'm still doing the same thing, but I'm
Hmm.
getting better results now that I've added this. And I think that's the big light bulb moment too for a lot of people that actually use this inside of their own strategy. Is like, look, yeah, you could do things without it and still have great results in some asset classes. But if you really want to take things to the next level and put a little bit of rocket fuel on what you're already doing, you just bring this element into your strategy.
Yeah. Where do you feel that some people get it wrong? What do you feel like or what have you seen in the industry, especially because I know social media, it's starting to become a more trending topic with infinite banking. Where do you see people doing it in a way that's definitely not a very productive way to help build wealth?
Yeah, I think like obviously it has to be set up with the correct company, has to be structured correctly with the right agent, and you need a coach, an ongoing coach to guide you through this. Having all those things in place will give you a higher probability of success. But I've seen folks just completely strip their policies, and never have a repayment system.
Mm.
And I've kind of, because if you think about it, there is an ideal candidate for this. Sometimes when you're still generating income and building income and growing your income,
Hmm.
could it be the right time? I mean, for the entire system to work properly? Yeah, you can start small, but at that stage, the focus is generating income and making more money.
Hmm.
What I found that people that are in that mode just not right there yet. They set up policies and then they strip it. There's no repayment. And of course, now it's not doing what it's supposed to do for them, right?
Hmm.
So that's where it goes wrong. And of course, there's exotic stuff. Like with any other industry, I always warn people, our industry is no different. And
Hmm.
especially now with social media and TikTok and all these other influencers. I mean, I have stuff forwarded to me all the time where I'm like, wow, I can't believe people are saying that and putting that online, because a lot of it is not accurate.
Hmm.
So yeah, anything exotic, I would warn. It's like exotic food. It's exciting when you try it, but you have no idea how you're gonna feel the next day. And sometimes with exotic investments and exotic financial vehicles, structured in very exotic ways, you got to be careful. And I've started to obviously see that in our space more and more. If something sounds too good to be true, it usually is. There's no get rich quick, only get wealthy for sure. And if something depends on three or more variables to all hit,
Hmm.
it's usually not a very good sustainable strategy. If, for example, if something depends on the stock market going up and interest rates to stay low and crediting rates to stay the same and mortality charges to stay the same, and all those things or variables unknown to anybody, that, unless you're a soothsayer or, you can read tarot cards or that kind of stuff, it's usually not a viable strategy.
Hmm. Yeah, you're not picking on, universal life insurance type strategies or anything like that, are you?
No, not at all. Not at all. But and I've seen like and there's a lot of a very exotic stuff with leverage too, right?
Yep.
And leverage could be very powerful done in a correct way, in the right situation, with the right type of client, set up in a correct way with a lot of risk management in place. It could work, but if it's just if it's just put out there for anybody, I mean, that's the thing that really could hurt people. I mean, yeah,
Yeah.
leverage can be very powerful, but for the wrong strategy with leverage, I mean, it could hurt a lot of people in any asset class, right?
It's true. I don't know about you, but I know lately in the last several months, we've had so many doctors and dentists come to us saying, "Hey, I was sold this premium finance policy or this wealth accelerator policy, and this thing is blowing up on me. Now I have to pay 60,000 a year in interest. Like, what the heck is going on?" And it's stressing out a lot of people, and we even just heard recently. I mean, Senator Ron Wyden from Oregon, right? Yeah, he actually wants to tax PPLI, or private placement life insurance, which is another one of those things. Like, sounds amazing, it sounds awesome, you can invest with it. Oh, but they might actually start taxing it, right? I mean, there's all kinds of stuff under fire right now.
Yeah, I've seen the same way, and that's why if people are listening to this, again with the exotic sell and the sizzle and all of these different variables that have to hit, and meaning they all have to align, like the
Mhm.
stars have to align. When that when that has to occur for something to work, then it's usually not going to work, and over
Right.
time, it's gonna fall apart. It might work for the first 2, 3, 4, 5 years, but then from 5 to 6, 7, 8, 9, 10, it's all falling apart. So I've seen that too. And again, yeah, leverage, it can hurt you big time with the wrong strategy.
Absolutely. What would be some advice you give to some of these people? Because obviously a lot of these people are looking to create passive income, right? And they're looking at, using, like, infinite banking strategies. They're looking at doing things with real estate and whatnot. What's your perspective? Like, what do you feel is like kind of like that right balance on how you use these kind of strategies?
Yeah, so for me, how I look at the world is usually where we are as far as an economic and market cycle.
Mhm.
And things have a way to be cyclical. Nature is cyclical, right? So
Yeah.
things have a way to be that. So your strategy should change, and it all depends on where you are at in the cycle. And of course, then you have to think about, well, what does the investor need? Sometimes somebody needs cash flow more than they need tax benefits. Sometimes they
Hmm.
need tax benefits more than cash flow, and they could maybe more be focused towards an appreciation play. So there's a lot of different needs. But as far as like a strategy advice that I could give to people is, you have to look at where we're at. And in my worldview, how I look at things is that we have had one heck of a run since 2012. Unbelievable
Yeah.
run. You know, if you think about a run, I would make the argument that we probably had I mean an unbelievable run towards what's it 2022
Mhm.
Q3 Q4 of that. So that's like 10 years. And we had a little bit of a gulp in 2020 before $4 trillion came into the economy magically. So we had a little bit of a hiccup, and then that happened. I think we would have had a down cycle earlier if that $4 trillion didn't come into the economy. So I look at that and I go, oh, this is interesting. Things don't go up in a straight line. Nothing
Mhm.
ever does. So from a cyclical standpoint, you know, I feel in my worldview where we're at, we're looking at just this, you know, we're on top of another election, on top of another election, on top of another election, and there's a politically very fractured country. The last time I saw this probably was in South Africa, you know, growing up, this
Mhm.
bad. So you've got that going on. You've got markets at all-time high. I look at this as capital preservation time, as protecting capital. So are there still deals? Yes, but you probably want to look at, things that are physical, things that you can touch, some real estate, some energy, but also, even shorter deals. Private lending is a great one. Where your time horizon is, it could be 6 months, it could be 12 months. You're in and out of positions, but it is a challenging time. I'm gonna make that argument for cash flow investing, and as an investor, this is a very challenging time
Mhm.
because things have to make sense, right? And I look at a lot of stuff every week, and there's not a lot of stuff that makes sense to me right now. And also,
Yeah.
when I say they don't make sense, it's yes, it's overvalued. I don't think you're going to get the returns. It's based on variables, which I don't necessarily agree with. And then also, you have to figure out from a risk management side, like how do you protect yourself?
Right.
How because savings and investing, two completely different ball games.
Hmm.
So savings, you got a conservative approach, putting in a vehicle with less risk. There's no such thing as no risk. I always
Hmm.
say they taught us in business school. What was it? U.S. Treasuries were risk free. I'm like, seriously? Anyway, there's no such thing as risk free in my worldview. I just think that there's less risk, and you take a conservative return for that. With investing, you're putting your capital at risk, and you could lose some or all of it. And I mean, the big thing about investing is risk management. So when I look at how do you manage risk in an environment where there's a lot of different risks, right? Politically, economically, market, institutions, it's challenging. So I'm not going to sugarcoat it and say, oh, it's easy. You just do X, Y, and Z. I'm going to say it's very, very challenging right now. And things really have to make sense for every person um, within their strategy if they do it or not.
It's true. I mean, we're seeing Warren Buffett get more and more liquid with cash fast. He's selling off $400 million of Bank of America stock a few weeks ago and things like that. I mean, there's definitely you're seeing a lot of people going heavier in cash than ever. I've noticed.
7 quarters, I believe, in a row. He's liquidated because they have to submit
Hmm.
a trading plan to the SEC. Otherwise, they could just move markets. So
Yeah.
he's been doing this. I believe it's 7 quarters. The last time I
Yeah.
checked, I could be off by one quarter or so. But yeah, he's liquidated a lot of financial stock. So you look at what the big players do. You see CEOs selling off massive amounts of shares. So it's that time for capital preservation in my worldview.
Yeah. Yeah. I was actually just looking at the one of the flow charts showing the GDP compared to the actual market of like the market not the market cap, but the market valuation of those companies in the S&P. Right now, we're well over 200% of the GDP value. So the last time we actually hit that high was in 2000, right before it crashed into Y2K, So if they were to get back into balance, back to where the GDP was, the SP would go from around 5,800 right now when we're recording this down to like closer to 2,500. I mean, that's significant. That's big. And that's one thing I've noticed is like I know a lot of people don't want to go into real estate or these alternatives because they're saying, well, the market, there's nothing wrong with the market. It's doing great. And it creates that complacency. And that's usually the complacency happens before the fall.
Yeah. And again, if you and I study what the big players are doing,
Mhm.
if they're getting out and liquidating and going into cash positions, you know that they're seeing things that the general public is not seeing, or any media is not reporting on.
Right.
So I could see a lot of them are preparing, for at least a downturn. And again, it's just cyclical. People
Yeah.
think sometimes that, oh, MC, sometimes you sound negative. I'm like, no, no, this will be, I mean, it's going to be fantastic, because every
Mhm.
cycle, there's opportunities at different parts of the cycle. It's just different. Everybody talks about buying low and selling high, even in the alternative asset space. I'm like, well, you get to buy low when things come down in price.
That's right.
So it's great. It's a great opportunity, but you need to have access and guaranteed access to cash when that happens.
That's right. Well, MC, before I ask you my final question here, what's the best way for people to follow you? I mean, we obviously know there's Cashflow Ninja podcast, but how else can they follow you?
Yeah, so cashflowninja.com is where the podcast is. And if they want a free paperback copy of my new book, Get Wealthy for Sure, the number one financial strategy for business owners to multiply wealth predictably, they could go to getwealthyforsure.com. Just getwealthyforsure.com, request a paperback book there, just pay for shipping, and we'll get it out to you.
I love it, man. Yeah, we'll put that in the show notes so everybody can get access to that too. That's very generous. Now, let me ask you this final question. This obviously the Money Ripples podcast, right? We talk about the ripple effect, and creating that ripple effect through people's lives, kind of your footprint that you're going to want to leave on the planet, right? What do you feel is your ripple effect, MC? Like, what do you feel like you're here to do on this planet?
Yeah, so what a mentor of mine right now as is saying that your children will inherit what you didn't learn.
Mm,
So I'm trying to start at home, start in my own house, and trying to learn everything that I can about wealth building, wealth preservation, and then obviously how to maintain and keep wealth within your family, and leave a legacy for generations to come. So I feel like if you empower things inside of your own house, then you have the ability after that to empower people in your community, and then
yeah,
people in your town, or your city. So that's how you create a ripple effect in my worldview. Is you start with yourself and your family in your own house, and then that ripple's going to spread, like I said, out to your community, your town, and your city. But that's what I'm focusing on right now.
I love it, man. We see a lot of the same things for sure.
Yeah.
So, well, man, I appreciate your time here today. We had so much fun, as always. It's been, well, at least in our personal conversation. This is, I think, the first or second time I've had you on the show. So, yeah, we're so excited to have you on, and appreciate you contributing and serving us today.
Appreciate you. Thank you so much for having me on.
Absolutely, man. Well, everybody, be sure to go check out MC's stuff. We got the links in the show notes there for different websites, whether you want to see the podcast or get the book. Definitely recommend you guys do both. But guys, remember all this stuff, all the things we're talking about. I mean, all these things come down to one thing, which is it's not about what you know, it's what you do with what you know. What are you going to do about it? You heard our opinions. Now, what will you do with this information? That's going to determine the rest of your life. Go and make it a wonderful, prosperous week. We'll see you later.